Hello guys, welcome back to another Lumley Trading video. In this one we are going to be going through the economy in general and then also the environment we're in now, which is high inflation, and again what is going to be the key data and the information to be paying attention to in this sort of environment. Now, before we get into the video, just wanted to note two things. Firstly, don't forget to join the Discord. It's obviously free. It's in the description. And it's kind of where you can just, if you need to get hold of me, you maybe have some questions, again, you can put them there. And if it's something you want a bit more information on, we can make a video like in this case. And the other thing was, again, if you want some Lumley Trading clothing, that is in the description if you want to grab any. Now, to get straight into the lesson then, what are the key things we're going to be paying attention to? So firstly, why is it important to know? And these are going to be the three main things we're going to talk about. Changes in interest rates and inflation. This is going to be important no matter what product you trade. Are you a futures trader? Are you a stock trader? Are you an options trader? Does not matter. This is going to be key. Interest rates will really affect everything. And again, inflation, the same thing. And usually they go hand in hand. So again, these are going to be important to know no matter what sort of trader you are, because again, it is going to have an impact on the price. Then economic conditions, again, especially on the stock market, these are going to be a key metric. Again, even if you're a swing trader, this is probably where this is going to be more key. We're potentially not talking about exact releases here, but we're talking about just the condition in general. Like right now, obviously, interest rates are high. Stocks, or you go back a few months, stocks were at their low. Why is that? Because near enough all companies borrow money. In a high interest environment, they can't borrow, or they don't want to borrow because it's so expensive, or they can just borrow less. And no matter what, even if they are borrowing, it's going to lower their profit margins, because obviously the rate and the interest rate on those loans is a lot higher. So again, that debt is just more expensive. So that's why it always has a really big impact on the stock market, because especially on the smaller cap side of companies, you'll see either a lot of them go bust in these kind of conditions, or again, their growth just really takes a hit for the few years when interest rates are high. So it's really important to know as a stock trader. And then onto the final thing we'll really be saying is important to know is basically the global economic events. And again, you may only want to pay attention to US data. That can be fine, but this will be really big events, things that are related to employment, inflation, and interest rates in general. And again, especially if you're an options trader like me, I trade options all the time. It's my main source of trading. Options is probably 90% of the trades I take. So for me, it's really important to know when these events are, because if I'm looking to take any potential swing trades, I'm going to check if there's events coming into the expiration of those contracts. Let's say I get a 5-day expiration contract. I want to make sure there's no big news events within that time or on that expiration date. And the reason for that is it's really going to affect the price of those options. Probably will make them very expensive coming into it, because again, options traders knows the events coming out. You're paying basically a premium to kind of expect that big move. So you're always going to be paying a price, and that's why for option traders it's key to know when these events are, because if you don't want to be trading these events, it can be smarter not to trade through these events at all, or expirations that include those news events, because again, it's really going to impact those premiums, especially if you're trading something like an SPX or the SPY, basically any S&P related, on any global events. And then obviously if you're trading a company, for example, we had JP Morgan earnings today. Again, this isn't going to be released today, but on the 14th of April, we did have JP Morgan's release their earnings. Coming into this, the premiums are going to be elevated because we knew this earnings release was going to be really key. And why was that? Because obviously we've got a banking crisis going on right now. So if they maybe had a lot of their deposits being pulled, and kind of having an increase in withdrawals, that's going to really devastate the bank. You're going to probably see it fall 5-10%. But on the other case, if their deposits increase, and again, they're showing they're stable through this crisis, you're going to have a massive move. Usually in JP Morgan's, they don't move them more than like 3% on releases. Today, they moved over 6%. And that's again, just because it's important to know why is it so key. And again, that's just knowing what's happening in the economy. That's why they move so much more. So now, what events really should you be watching out for? So these ones are released once per month, so we'll go through these first, and that's going to be the CPI, Consumer Price Index, Producer Price Index, PPI, ADP, Non-Farmed Employment Change, and then you have Non-Farmed Employment Change which is also known as NFP. Now, these bottom two, these are employment based. These top two are inflation based. Now, the consumer price index, CPI, that's going to be the most key out of these four to be paying attention to. This will have the biggest impact on the market. And then out of the employment ones, non-farms is going to be the bigger one to be paying attention to. Not to say these two aren't important, it's just the other two will have bigger effects on the market. So these are released, again, be paying attention to these releases. On the next slide, we'll go through what to be looking out for on these, just to make everything clearer. And then we have these releases, so the Fed bank rate and the FOMC meeting minutes. These are released a lot less, 8 times per year, so roughly every 6 weeks. These are going to have the biggest impact on the market, and again, that's why they're released that bit less regularly. Now, how do we read current data? So starting off with inflation. In a high interest environment, so basically what we are now, stocks want the CPI and the PPI to come in lower than expected. Because again, this is going to be great for stocks. If it's coming in lower than expected, inflation is coming down. If inflation is coming down, the Fed is less likely to increase rates. So that's why it's good for stocks, and that's why it will be bad for the dollar. Because again, if interest rates are less likely to hike, that makes currency weaker. So again, that's basically what we said here. But yeah, those are the key things. That will be the key thing if you're looking maybe to screenshot something, this part of information here. And then what's also good, whether you're a swing or day trader, you may use these results differently. If you're a day trader, it can be a bit easier because these aren't ever released on the same day. Consumer price index and producer price index aren't released on that same day. So if you're a day trader, you see CPI come out less than expected, you could play that upward move. And then on the other hand, if you have PPI come out, 2 days later, and that ends up coming out actually higher than expected, you can trade that short bias move. So trading them from a day trading perspective can be potentially a lot easier. Now, if you're a swing trader, again, if these come out both under expectations, it's going to kind of give you more confidence in that trend and potentially the stock market going up, and if you're trading FX coming down. So that can be really beneficial. Again, it may be a bit harder as a swing trader though if they come in differently. If CPI comes in, for example, less than expected, PPI comes in higher than expected, that could create some confusion and could potentially make those swing trades harder to execute. Now onto employment data. Again, this is going to be just as important. Actually, not just as important, tiny bit less important, but important in general. So in a high interest environment like we are now, stock markets are going to prefer a lower than expected NFP report. Again, this is just because it's showing that the economy is not growing as quickly, which is usually a good thing in a high interest environment because it means the Fed is less likely to continue to increase rates. So again, that's going to be great for stocks, bad for the dollar. On the other hand, if we start seeing them come in higher than expected, that's going to be bad for stocks, good for the dollar. So now how to go about actually finding the events that are happening and then also to find out what the forecasts are. There's two kind of main websites I think most people use. It's going to be either Forex Factory or investing.com. Personally, I'm a Forex Factory person. Just kind of prefer their layout. So we'll just click on this link and I'll kind of go through a quick run through on what it is. So today, again, this is being recorded on the Friday, so the 14th of April. We've had core retail sales come out. So again, this could have been found all on Forex Factory. What was the forecast? It was coming in at negative 0.4%, ended up coming out at minus 0.08%. So this can be really good to know when the events are happening and finding the forecast. I don't know if I would go about trading the information off this website. And the reason for that is it's just going to be a bit delayed. So there's two potential workarounds. Obviously, if you've got the money, Bloomberg Terminal is always going to be one of the best solutions. But what's really going to still be quite powerful, and personally I just use it myself, is either TweetDeck or Discord. So you'll have a lot of them, Walter Bloomberg being one of the first names that come to my head. They post the news, basically you copy it from Bloomberg and send it through. So obviously you're going to get it a tiny bit later, but it's going to be literally about the matter of a few seconds. So obviously if it's a trend trade, it may not be the end of the world. You kind of wait for that pullback. If it's literally going to be a 10-second trade, then again, those 2 seconds that you're waiting for, it may be too delayed and you may not want to trade it. But anyway, again, this is where we're going to find the information. You can find the data basically for every day. You can go forward, back, whatever you want. So again, we can see this week there was definitely big news. On Wednesday, for example, we had the CPI, we had the FOMC meetings, we had the crude oil inventories. Again, these are key things to know. Depending on the products you trade, there may be ones that are important to people that aren't important. So, you know, if you're a futures trader, you could trade commodities. On a Wednesday at 10:30, you have the crude oil inventories. Again, this is personally something I trade. It does have, or can have, a relatively big effect on the crude oil futures. So again, if that's something you're trading, that's a news release to be paying attention to. CPI, for example, though, this is something that's going to affect everything. It's going to affect your futures, it's going to affect your bonds, it's going to affect your stocks, your options, everything. So this is going to be a key one. Again, this is why we talked about it in the previous slides. But what you can see the difference is crude oil inventories really only affects crude oil. It comes in basically this yellow folder. On the CPI, you can see it's red. That's because it's going to, usually it's a high impact, but if it's high impact, it's usually going to affect more products. So if you just want news, so maybe you're a technical trader, you don't want to see, or you don't want to be caught in a high impact news releases, then what you could really do is just filter this to high impact, know what releases are coming out. So obviously that Wednesday was big. You had a lot of news from the US and Canada that day. And then you can really just go forward and you can see, okay, potentially, let's say on Monday, you're looking at a technical trade. You can see the Empire State of Manufacturing Index is coming out at 8:30, so pre-market. So if you're opening up a trade once Monday's open, then you may potentially be all right. What's happening the next day? You got the CAD CPI, not really going to affect the US. You got CAD data, English data, not going to affect it. What you could also do is also turn all of these off apart for the US. And then you can see, okay, cool, the Monday, you still got that Empire State. Tuesday, you got nothing. Wednesday, nothing. Thursday, unemployment claims. Friday, flash PMI. So again, these are just things to note. If you don't really have the big ones, like the ones we put on the slides before, if it's not one of those events, you'll probably be fine taking technical trades through them. Those other ones, again, if you got technical trades, you probably want to be cautious coming into it. So again, this is just really going to be key, even if you don't want to trade off the news, is just knowing when it is. And again, I personally prefer to actually have even down to the low impacts, because again, it will tell me when certain futures potentially could move. And then the main economies I focus on are going to be USD, yen, the pound, the euro, and then also the CAD. The reason I like the Canadian data is because, again, it can move the US data more than others, so I just like to be paying attention to what's actually happening in Canada. Well, I won't trade off the data, but again, it's just good if there's a big, maybe I'm in a trade and I see potentially the S&P move quite quickly. That might just be the reason for it. Again, it usually won't have a lasting impact. It will usually be something like a fade if if the Canadian releases affect US. So that was kind of just a quick thing on the kind of website to use to find the events and kind of the things to be looking out for on that website. And then just onto the final slide, the final notice and kind of note to be taken on the economy, and just things I wanted to know. Didn't know if I was going to put this in here, but I think it takes a minute or two to talk about. Could just be good for traders to understand if you maybe haven't already thought about this or heard about it before. So, as you know, in summer, for example, the weather gets hotter. That's obviously, everyone knows that. So what don't you do in the summer? You don't tend to heat your house because it's warmer. So this can lead to kind of seasonal moves on things like crude oil. So crude oil, you'll tend to see in the winter months, is obviously going to be a lot higher in price than it is going to be in the summer months because people don't need it as much. So that's kind of one of those things I just wanted to note. Again, seasonal moves. You tend to get this in quite a few products, so they're just things to be looking out for. Now, secondly, it's going to be world events and different things in general. So warmer warmer weather than probably expected. Again, probably can increase the air travel. So, if you're looking at the Delta stocks, stuff like that, may potentially increase it. And then maybe tourism related activities, companies may have increased. Again, that one could be a bit harder to judge. But what the key ones could be is if it's unexpected big weather. So, you see a hurricane hitting Florida. That's going to affect some commodities. So if you're a futures trader, you may be able to trade those commodities. Trading that initial release, you'll tend to see a massive spike on this release. And then maybe, again, it potentially was a bit of an overreaction. You start to see it pull back. And then, again, as we start to see how big the event actually plays out to be, again, then you'll tend to see that second move. But again, Hurricane's going to be a big one. Basically, anything related to, is it going to ruin, again, the commodities is going to be the main one for it. Commodities and agriculture, is it going to ruin a crop? You know, if you see maybe there's a drought in a country that does a lot of corn, you know, if there's going to be then less likely for that corn to come out and be able to go into the market. You know, the supply of corn is obviously going to be a lot lower. What's that going to do? It's going to boost those corn futures. So those are just things I wanted to know, and things you may just see on the news. You may not even think about it from a trading perspective, but again, it can have an impact. You really just want to be taking in everything you can. So that was the breakdown on the economy in general and the overall kind of high inflation environment we're in. So I hope you enjoyed the video. If you did, why not drop a like and subscribe like we said before. Again, join the Discord if you got any things you really want to ask or you want videos on. If you want Lumley Trading merch, it's in the description. And otherwise, I hope to see you next one, and that's it. Peace.